this week's Forex video, I'm going to do a real quick video on ATRs, as I did get a question last week if I could do a refresher on ATRs and how I use the average true range indicator in my trading. Now, I'm only going to post this video on YouTube, not on the website this week, as I'm still trying to record and finish up the new course that we will be releasing. Now, before I get into the ATR, I do want to touch base on how my trading went this week. And for me, it was a rough week. Those of you that talked to me through email, if you talked to me up until Friday, I was pretty much down all week, and I expressed that to each and every one of you guys. Now, the reason that I was so open about my losses is, you need to see realistically how traders trade. All right, on the internet, you'll see a lot of times where, people only want to show their wins, only want to show, how much money they made, but that's not real life. In trading, we're gonna have losses. So just a real quick recap. So I basically placed 7 trades for the week, which is a little bit on the low side for me. Trade number 1, break even. All right. Trade number 2, break even. And then I have loser, loser, both for 20 pips and 1% of my trading account on each trade. So now I'm down roughly 2% after 4 trades. Not looking so good. Next trade I take, break even. I felt like I could not catch a break. And then on Thursday night, Friday morning, dollar CAD, 40 pips, 2% gain, which this put me back to break even. And then I had a USD CHF trade plus 40 pips, which put me up 2% again, which was a 4% gain on this day, which, 4% minus the 2% I was down gave me a 2% gain for the week. I only made 46 pips, but my win-loss ratio was 71%. Now, on the internet, a lot of people would come out here and say, wow, look at my win-loss ratio, 71%. Well, that's not really important to me, right? What's really important is the percent gain of the account. Now, I do target 3 to 5% per week. And as you can see, I did not reach my target, and that's life. Now, if I went around and I tried to scream and tell everybody, wow, I made 46 pips this week, most people would laugh at you and say, oh, you only made 46 pips. You're a terrible trader, blah, blah, blah. Well, let's think of this in terms. All right, if you have a 2% gain and, you basically have $1,000 account, well, that's not a lot of money, as that would only be roughly $20. If you have a $10,000 account, however, now you're looking at, roughly $200. And as your account grows, that 2% is going to become more and more significant, where, the 46 pips, it's not really that big of a deal. If you can, over time, end up growing your account to say a $100,000 account, that 2% gain would still be a $2,000 return on your investment that week. Not bad. So, the real key number out of these 3 numbers that we're looking at is really the percent gain. Now, I do have to rebalance my portfolio again this week of the position size that I will be taking on the trades. I only trade 12 currency pairs. You can see them at the bottom of my screen down here. All right, now let's go ahead and touch base on the ATR, which is the average true range. I leave this to default, which is 14 days. Now, let me put this onto a daily chart real quick. Now, when we look at this on a daily chart, you can see the euro basically has a 99 pip daily ATR range. Now, I use the daily because I try to plan all of my trades well in advance, and I feel that gives me a pretty good edge, as when I'm ready to trade, I already know the direction that I'm looking to trade. I also know what the expected range should be for that day. Doesn't mean, that's what it's going to be, but, that's what I aim for. Now, I do not typically have the ATR indicator on my chart. Instead, what I do is I have a market analyzer within NinjaTrader, and I'm always looking at the bid-ask spread. I want to see what the spreads are. And right now, as I'm doing this video, the market's closed, so these numbers aren't really moving. The euro dollar, the ATR is 99 pips, which matches down here. Sometimes when the market's closed, the ATR on this list is different than what the indicator is, as the indicator has not updated for the next daily bar. So you'll see when we go to some of these other pairs, it could be off just a bit. But, you know, the euro dollar, if we have a 99 pip ATR, let's talk about why this is important. All right, if you're looking to hit 100 pips on a per trade and you're looking to close out each trade per day, the likelihood that you're going to initiate the trade at the very low and the very high of the day is very slim. Where if we're looking at the pound yen, which has a 193 pip daily ATR, it's a little bit more realistic. And let's go look at the differences between these two ATRs, one at, you know, roughly 100 pips and one almost at 200 pips. And before I do so, let me clear this indicator off my chart just so we can see the screen a little bit clearer. And I'm going to go ahead and move the ATR market analyzer off my charts real quick. All right, so the first one, let's go to the euro dollar. Actually, let's go to the pound yen real quick. Now the pound yen, and remember we have roughly a 200 pip ATR. Doesn't mean it's going to hit it every time, but from high to low, 90 pips. This day it didn't meet it. Let's go and look at the next day. Here it did from low to high, 178. Still a little bit shy, but you know, well over 100 pips. Oops. Now let's go ahead and go on this day. Low to high, 305 pips. So as you can see, the ATR is an average, right? So we're looking for an average. And here's a baseline that I try to make sure I don't go over. I never want to intentionally shoot for more than a 50% of the daily ATR. So for instance, if we're going to use this example on this one right here, on the pound yen, if the daily ATR is 200 pips, which it's just shy, but just to make math simple, we're going to say that 50% of that 200 would be 100 pips. So let's look in this chart and see if we could actually pull off a 100 pip trade. Let's say we shorted the market here. The market runs down. Well, no, we would not have made it there. What about if we took a long trade from up here and tried to go up to here? Again, we would not have been able to have any of those trades that would have worked out. Now let's go to the next day. And again, we're only looking for 50% of the ATR. Let's assume we're going for a breakout of this level from here to the high, 128 pips. That would have made our 100 pip target, which is 50% of the ATR. Let's go to the next day. Next day looks like it's going to be a little bit shy, but let's assume that we do a breakout again down to the low. That would have only been good for 47 pips, not quite enough. Let's assume that we go from breakout from here up to the high. Well, here's 112 pips. This one had the potential to go 50% of the daily ATR. Now let's go over here to another day. And let's say we do a breakout above this range here. This right here goes 228 pips. Again, it's believable that we could hit 50% of the daily ATR. Now let's jump back over to that euro dollar chart. And a lot of times, guys, when I'm looking at the ATRs, I even shade it down more when I'm looking for 30 or 40% of the daily ATR, depending on the strategy that I'm actually trading. Now, look at this euro dollar. Remember, we said it had a 100 pip daily ATR, 99.5. So we'll just round it up to 100 pips. Well, what if we were still using that same the same strategy as we were looking on the pound dollar or pound yen, where we're looking for 100 pip targets? Well, if we go from here for a potential trade, 44 pips, no good. From here up to the high, no good, right? 62 pips. Again, we would not have hit it. Let's go to the next day. Let's assume that we're trying to do a breakout of this level here up to here. Again, we would not have been able to reach a 100 pip target. Let's go to the next day. Let's say we sell a breakdown here down to the low. On this day, again, we still would not have been able to reach that target. Now let's do these 3 days backwards, or again, but using a 50 pip target and just splitting that 100 pip ATR in half. So instead of going for 100, since the daily ATR on the euro dollar is 99.5 and we'll call it 100, half of that would be 50 pips. So we sell the breakdown here and the market goes 66 point something pips. So it's possible depending on the strategy and your entry, but possible. Let's go ahead and say we bought a breakout off this little ledge right here. 41 point something pips, not enough to reach it. Let's say we did the breakout from here up to here. Well, that came pretty close again, 40 something. So, we did not reach it there. Let's say we shorted it from here down to the low, 47. We almost made it. From here up to the high, 62 pips. So you can see by using a target 50% of the range, it increases the probability that you will reach your profit target. Now on the euro dollar, if you guys, those of you that are linked to the private Twitter account and whatnot, know that I'm using a 20 pip stop loss with a 40 pip take profit, which means I'm only aiming for 40% of the daily ATR on the euro dollar, which would be 40 pips. So on a lot of those examples, it would have been much easier for me to hit that 40 pip target than if I was going for a much larger portion of that daily range. All right, guys, I hope you guys found this video informative. And if you have any other questions, please leave a comment. It gives me more ideas to create new videos for you guys. Until next time, guys, good luck and good trading.